Good morning. It is Monday, August the 3rd, 2026. We hope everyone had a nice weekend. This week here is our kids here in Charleston, the last week of summer, really. So this Friday we get to meet the teachers for the upcoming year, and then they're off starting next week. So early, so much earlier than we started back in Charleston. My mom and dad are in town, which is always fun. Nice to have the extra help. I can hear. I think my mom's running them through. Yeah, it's like grandma Pilates class or something. I hear them bouncing around out there a great deal. So, if you hear it in the background, that's what it is. Kids yelling, exercising. Last week of summer. Last week of summer. So. Speaking of review season right around the corner, our team, we are getting prepped and ready to go. Most importantly for that, I have a haircut, much needed haircut later this week, getting ready for review season. But in all seriousness, you'll be looking for those meeting invites. I know I mentioned this like every 6 months, but the earlier that you schedule, once that link gets sent out, the better, right? It really helps us to kind of start preparing as much as we can, so we can just be as prepared as possible for your review. Like when we know where you are in the time slot, we can start building our processes around that. So please do us that favor and schedule earlier rather than later once you receive that link. Markets last week. U.S. markets up about 1%, international markets up about 2%. Kind of the big headlines, the Fed meeting, as expected, no rate change. However, there were 3 dissenting opinions that wanted to hike rates 25 basis points. And that's largely off of, last week we had the PCE inflation data come out, which is the Fed's preferred metric. 3.7% in June. And that's coming off of 4.1% in May. So definitely above the Fed's 2% target, which is likely what's driving some of those dissenting opinions on the Fed committee that they want to hike. So outside of that, earnings reports. We've talked about earnings for a number of quarters now. Just continue to be strong as a whole, right? Of course, there's always going to be some winners and some that don't do as well. But by and large, earnings exceeding expectations again, which is, again, people wonder, sometimes you see, valuation in the market looks a little stretched. Like maybe, but if earnings drive that denominator underneath, those valuations can look a lot better a couple quarters down the road. Also making headlines last week, and this won't apply to any of the families we help, but always interesting when you see hedge funds blow up. All right, so AI-focused hedge fund, Situational Awareness, collapsed, forced liquidation. It was a $45 billion fund at its peak like a month ago, and then it lost pretty much everything. But down 75%, basically in 1 month. Forced liquidation. I could talk about this topic for a long time, but again, it's whenever you're using leverage, like 4x leverage, and you're using it on highly volatile chip stocks, things can go quite poorly really fast if things move in the wrong direction. So always a lesson to be learned with that. So we'll see what comes of that. But we hope everyone has a great week. Questions, comments, concerns, please don't hesitate to reach out to our team. And we are really excited for review season right around the corner here. So we'll talk to you soon. Thanks.